Today I'm having a conversation with CJK. He's a 10-year Bitcoin veteran, and he's the founder of People's Reserve. How you doing, CJ?
Hello, it's great to be here. Thanks for having me.
Absolutely. What's your, if we, I see your shirt, the red pill, sorry, the orange pill versus the blue pill. Uh, what are your thoughts? Why do you think people should own Bitcoin?
Ooh, okay, starting out good. It's such a deep question, actually, and you being a financial professional, you understand it better than most people. There is such a confusion, number one, between the difference between money and currency, and then number two, people don't segregate their net worth. They kind of just look at that one number, and they'll include their real estate, their stocks, their cash, their savings, and bundle it all together. But that's a very confusing number that doesn't really mean that much. So I think when it comes to Bitcoin, it's your savings account. And savings always starts at 100% allocation, right? And then your needs, and then your wants and desires, and then your investments will take away from that allocation. So my
Yes.
mindset is, Bitcoin is an engineered money. For the first time in human history, we actually have a real money. We learned a lot about money from gold, and it's been a fantastic medium, but now we actually have the first real money with absolute digital scarcity. And now we can leverage that economic reality to empower we, the people. And that's best done through a 100% allocation into your savings into Bitcoin. And then allowing, people want to live life, right? We're not just going to save and not consume and take our kids to the monster truck show and go to a baseball game or a football game, whatever you're going to do. You have to live life and enjoy it. But when Bitcoin is your savings, you're going to be able to live more life and you're going to be able to enjoy more because Bitcoin does the hard work for you. Instead of you having to trade your time and energy, Bitcoin grows your time and energy through space and time. And that's a value proposition that I think the whole world is going to adopt and should adopt.
I think one of the things that really shocks me about people who don't quite see the benefits of Bitcoin is that they think if we go to a Bitcoin standard and there's no inflation, there's nobody stealing our money from us, then we'll have no reason to spend for whatever reason. I don't know. I don't know what their reasoning behind this is, but I think they think that governments need to convince people to spend, otherwise they won't spend. What are your thoughts on that?
Yeah, I mean, my experience has been the exact opposite of that. When
Yeah.
I first started out in Bitcoin, I bought my first Bitcoin for just under $150. Um, Later on, I was in the Ethereum ICO at less than a dollar. So when I look back on that and I say, hey, when I was first buying my Bitcoin and I was first investing, I could not afford to sell anything. I had to let the market do the hard work. What do they say? It's better to spend time in the market than timing the market, right? Because now all of
Yeah.
a sudden you're not an investor, you're a trader, and the markets are going to chew you up and spit you out. Well, that's been my experience as well. Watching my small Bitcoin percentage allocation because of my lack of good cash flows, just making an average salary, watching it turn from a small allocation to now basically almost 100% of my purchasing power and wealth, um, it's become easier to spend. So over
Yeah.
time, I know where Bitcoin's going, so I still have to discipline myself, and it doesn't matter. Like I always, growing up, I loved Audi R8s. Like an Audi R8 is like my favorite sports car, and I said, "Well, man, if I ever have money, I'm gonna buy an Audi R8." Well, I could probably make a bid on Audi, like the car maker, but I'm not
Well,
interested. I'm not
yeah.
interested at all because I know where Bitcoin's going and we're only 15 years in. So
Yeah.
this is no longer about me. It's about my children and it's about the future of humanity and it's about what's best for everybody, which is getting into a sound money system. And because we're only 15 years into that transition, I'm able to discipline myself. But because the growth has been so amazing, life changing, it does make life easier to live. Like I was saying earlier, we can go to a football game, we can take a vacation, we can go do these things. And the longer and longer I'm in Bitcoin, the easier it is to spend my Bitcoin to go do those things because technically even though proportionally my ownership of the network is declining, my purchasing power in dollar terms is increasing. And even when you come down to that lower low, the Bitcoin cycle, you get a higher high and then you get the
Right.
low. The definition of store of value is actually higher lows. So everybody gets excited about the peaks, but when you're in it long enough, you get more excited about the lows. And that's where we're at right now. We're at where I think we're at the low before this storm really starts to spin. And when it spins, again, a whole new wave of liquidity, a whole new expansion of purchasing power will go to those who hold Bitcoin. And that makes it easier to spend, not harder. So I think that's
Right.
a fallacy. I don't agree with the idea that you're going to hold Bitcoin and never spend it. The longer you hold it, the easier it is to spend.
I think one thing that you touched on there was your purchasing power eventually increases in terms of Bitcoin. There was something that I was looking at. I just randomly had a thought where I was thinking, in terms of US dollars, your salary is going to go up. Your savings amount is going to go up. Like the nominal value will continue to go up forever. But over time, the real value keeps decreasing, right? So if you're not del if you're delaying gratification, your savings will keep rising, they'll keep rising, but you'll be able to buy less with your savings, even though you're delaying gratification. On the other hand, with Bitcoin, it's completely the opposite. Your savings will decrease, you'll get paid a lower salary over time, but the real value of that salary will increase over time. The real value of your savings will increase over time, even if you have less Bitcoin. Any thoughts on that?
Yeah, I mean that's so well said because that's the essence of flipping the modern monetary theory fiat
Yes.
unlimited supply of thesis upside down and getting back to sound economics and sound money. But there were a couple of points that I wanted to make there that were rushing through my head when you were saying that. And the first point is about yield and about
Yeah.
cash flow because everybody's always in the mindset of I have to generate cash flow. That's why I work. I work to bring in cash and then I spend it and then whatever's left over I can save. So we're stuck in this ideology that you trade time and energy for currency and then you spend the currency on your bills and then whatever's left over you can save or invest, which is true, but it works against you. And that's what makes me like so passionate about Bitcoin because it works for you. People's Reserve, our slogan is a market maker for we the people. Because we want to empower people. We don't want to extract value from people. And the whole system is a value extraction scheme. And that's when your salary goes up, the real crime here is that actually inflation is theft because inflation, each dollar that they create steals a fraction of a penny out of the dollars that are already in your pocket. That's where it gets its purchasing power from. They can't magically create purchasing power. You can't magically create value. Value
No.
uh, that's not how the economy works, right? So when they print money and send it out to everybody, they're stealing money from everybody. And the real sad part about it is that the CPI equation is so cooked. It's so, I mean, you're a financial professional. This is what's that one? This is like Madoff style. This is Ponzi scheme. This is the real rate. If you go back, and I love Trueflation, the name of Trueflation, but what a waste of such a good name because they took a proprietary equation and made it even more worse than the government's equation. At Govflation, we go back and we use the 1982 pre-substitution CPI. So if you
Hmm.
go back and you use this has nothing to do with how I feel about inflation. It's the government's financed equation that they were using, the official equation. It's just pre-substitution. We're at
Can you
11%
can you
today.
just explain what that means? Pre-substitution, what does that mean? Just because
Yeah,
I know there's people who don't understand.
right, absolutely. So, a way that this hits home is when they're able to substitute, they'll have a basket of goods, and then they can choose out of that basket of goods. And basically, they're not choosing to get a fair and honest number. They're choosing to get the lowest output. So, if filet
Right.
mignon goes up 10%, but hamburger meat goes down 10%, well, hey, the price of meat just went down 10%. They
Yeah.
can pick and choose from that basket in order to cook the books. And what's happening is they're cooking it so much that government CPI today is less than 3%. But if you use the 1982 version, it's actually greater than 10%. It's almost
Wow.
11%. So, someone who thinks, oh, I'm getting a 4% raise, like you said, actually at the end of it, even with your raise, you're buying less stuff. So the performance in stocks, the performance in your savings account, the performance of your wages, if you're not deducting real CPI from that
Hmm.
number, then you don't understand what your real rate of return is. Sure, your nominal rate of return might feel like you're making extra money, but that's in the pit of everybody's stomach. Everybody knows right now, hey, I'm making more money, but I'm buying less stuff. What the heck's going on here? Well, what's going on is that inflation is not accurate. And the problem with that is that it trickles down, to use their terms, it trickles down into GDP. Because when you look at CPI, things are trending back towards 2% target. Everything is good. When you look at GDP and you take nominal GDP and you reduce it to get real GDP, in other words, you want to account for price increases, not as economic growth. So you have to deduct those price increases. You have to take the rate of inflation and deduct it from nominal GDP so that you
Yes.
don't mistakenly account price increases for economic strength. Well, their CPI is so understated that it's actually overstating GDP. So that's why the
Right.
Federal Reserve is lowering interest rates at a time where CPI is heading back down to target and GDP is saying we have a strong economy. Both of those signals are saying you should not be lowering rates. And when you look at gold going to new all-time high prices, that's signaling you should actually be raising interest rates. So something's going on here where the Fed knows, right? They're not just going to lower rates, especially when the two things they're telling everybody to look at is saying don't lower rates. So what are they looking at? What are they figuring out? And that's when you look at some of these other economic indicators, like first of all, unemployment. Unemployment has been above the midline for like 9 consecutive quarters now, which signals contraction. And actually, that contraction is accelerating, which is what triggered the SOM rule. And when you look at manufacturing, manufacturing's been below the midline since the first quarter of 2023. Then when you look at credit card delinquencies going up, you even at the rate of consumers eating out instead of eating at home, signaling that there's a lack of discretionary spending. People are, they at the end of it, they go and they work, they pay their bills. There's not even enough left over for them to go eat out. And that is as bad as it was during the great financial crisis and almost as bad as it was during COVID. It's like the third worst time over the last 24 years. So these are like, they're not promoted economic indicators by the powers that be because it's not CPI and GDP, and that is what we say it is. But when you look at the reality of the economy, all the warning bells and whistles are going off, and everything is saying we need to lower. We shouldn't have just lowered rates 50 basis points. We should have lowered rates 300 basis points. And then, some people come back to me though, and they go, "Well, that's wrong, because that would create more inflation." But Raja, I think this goes back to the lack of people's financial education, which makes the work that you do and I do and everybody else in Bitcoin who's delivering these orange pills so important, because people need to understand where they're getting gamed here. They need to understand what's going wrong. And me and Max Kaiser, we were actually put in Forbes probably about 6 months ago when we talked about the debt death spiral. And the interesting fact was that we are so far along in this process that when you raise interest rates, when you have everything in your game plan and your game theory is set to neutral and things are working the way they should be, when you raise interest rates, sure, that fights inflation because it makes the cost of capital go up. So less people seek credit, and inflation is the expansion of the currency supply and the extension of credit. They're both the same thing. So it fights against it, creates a deflationary power. But we are not in a normal playing field. The United States government has $35 trillion worth of debt, $217 trillion of unfunded liabilities. And everybody knows now that the government's net interest expense and expenditures have become the number two line item cost in the United States government budget, even more than Medicare and military. So when we raise interest rates, it actually forces the cost of the government's deficit spending to increase substantially. So this might seem like a radical statement, except especially to some of your listeners who are more financially sophisticated. I believe the United States Treasury has lost the ability to create demand for U.S. Treasuries by raising interest rates. And I think that was I think they just figured that out. And I think they said, well, hey, actually, if we lower rates again, the net interest expense is going to go down. Right. And now the fear, the counterpoint to that is, well, inflation is going to go back up. No, it's not. prices are going to go back up because there's going to be increased demand against a limited supply. So you're talking about the economic force of increased demand from all that money on the sidelines that was getting the 5% plus, no
Yeah.
longer going to be incentivized to save, rushing back into the assets, rushing back into the goods and services. And now you have a new supply demand equilibrium, which is going to produce a new price. But when we talk about inflation, there can be no change in supply, there can be no change in demand, and prices still go up because it's not supply or demand that's changing. It's the purchasing power value of the currency itself. And that, I
It's
think,
the
is the
number.
most powerful thing.
It's basically just the number of dollars chasing the number of goods is increasing because they keep adding more and more. And then with the interest, essentially what they're doing is because the US government has to borrow even more money to pay the interest, Federal Reserve has to print more dollars and add them to the economy. So like you said, it's a death spiral and
Yeah.
it'll continue to get worse, continue to get worse. And that'll probably happen for a very, very long time until the US dollar collapses.
Yeah. So on this side of the cycle, you have all of these people who sold their assets in March of 2022, or even before that, in anticipation of the rate hiking campaign, which they were very clear about to everybody. And it was, the signaling was very fair and very clear for people to get positioned, and they get into the treasuries, and then they start earning the yield. So what are they going to do with the yield? Well, somebody who had a multi-million-dollar portfolio and liquidated and went to got rid of all of their speculation. Maybe they kept a couple blue chips and some dividend paying stocks, but a vast majority of that principal went in to get at 5% because why risk principal value for 7, 8, 9, 10% when you have no principal risk with 5% in US treasuries? So now
Right.
they're the ones getting paid that yield. Well, what do they do with that yield? Save it, compound it? No, they spend it into
Yeah.
circulation, just like the government. Now, on the flip side of this, now you're going to take away those people, force them back into assets. And what happens is they call it a demand destruction campaign, right? So the demand destruction campaign is designed to destroy the economy. That's what it's designed to do. So
Or slow
nobody
it
should
down
be
at least.
surprised.
Yeah.
Yes, nobody should be surprised that the economy is slowing down. Nobody should be surprised that when you go to Govflation and you look at our statistics based on the 1982 pre-substitution CPI, that GDP has been slightly negative for about 9 consecutive quarters. Now, as you well know, 2 consecutive quarters of negative GDP is a recession. So we have been in an artificial recession based on the demand destruction campaign. And I got it, credit where credit is due. We have not experienced any economic fallout as of yet. So they did a pretty good job of reducing the pace of the economy through the interest rate hiking campaign. But now that they're turning the other way, the opposite is going to happen. And now the government deficits are not going to increase from their net interest expense. Now the government deficits are going to increase because they have to revive this demand destroyed economy in order to get it
Hmm.
going again. So we are
Right.
stuck. We got zombie stocks and now we have a zombie economy. And I'm telling you, it's going to take more money than it did during COVID to revive the zombie economy than anything else. This is not a good scenario we're heading towards.
And we can see it from the charts. We can see from the money supply. I'm not sure if you've seen the charts, but it dropped for a bit and then it came back up. And it's going to probably skyrocket at this point. What do you think
Yeah.
of that?
Yeah, absolutely. I think Lawrence Lepard shared a chart like that the other day showing the rate of inflation since the 70s, and it was pretty much like a 45-degree angle. Um, and what they saw is even with the reduction in M2 over the last couple of years, it hasn't even come back. It hasn't even been like a reversion to the mean, right? So we're still way above the mean because the angle of the pace and rate of change that we saw, yeah, there you go. So you could even from just 2000, you can just draw a line with your eyes going up. Something happened in 2020. The rate and pace of
2020,
inflation
yeah.
has now changed. We've gone from that 45-degree angle now up almost to like a 65 to 70 degree, maybe even more than that. My degrees could be off a little bit, but now you can see we haven't even reverted to the mean. If you keep that 45-degree angle going, we are still way above the mean, and we are going to be moving into a time period where the government now doesn't need to increase its deficit spending to service the interest because the interest rates are going back down. But now it's going to need to spend uh, a substantial amount of money, even more so than the $1 trillion it's spending on interest to revive the economy because we've demand destroyed the economy. And if they don't do that, I would say just look at Venezuela. Just in Venezuela, they destroyed all demand. The only demand there was for water and food, and prices still went up because the source of inflation is not the economy; it's the currency.
Yeah. So you were saying that there hasn't been an economic fallout. I think the only reason for that is that people are just putting more and more debt. They're putting more of their expenses on debt, and like you said, credit cards are increasing, but eventually they're not going to be able to pay those back,
Yeah,
right?
yeah, absolutely, absolutely. Well, yeah, I mean that's the definition of kick the can down the road. So
Yeah,
a lot of people say, oh, well, when we raise interest rates, people borrow less money. Yeah, but credit's at all-time highs because people are struggling even at the higher rates, as you said.
yeah.
But I hate when people say that because what they're saying really is that what we the people do is actually more important than the government. Well, household credit is $1 trillion. One, just over $1 trillion. The government is $35 trillion in debt, and they've promised to spend $217 trillion over the coming generations. So you're talking about roughly 300 trillion versus 100 trillion, or just 1 trillion. So 300
Yeah.
times more debt added by the government than we the people. And then you think raising interest rates on we the people is going to solve the problem? The Federal Reserve has been so busy fighting the economy, they should have brought the fight to government spending. And if they had done that, it would have been a much more effective way, a much more secure way to understand that the $35 trillion we see in debt there. And then on the bottom right, excuse me, I was misspeaking. Is that 219 on the bottom
It's
right
been,
now?
yeah, it is. It's been going up like crazy. 219. This is what
Oh
this is
my
what
gosh.
CJ is referring to. This part right
That
here.
is
Oh,
that is
sorry.
unbelievable. That is
But it,
unbelievable. 219 trillion plus the 35 trillion. And they want to talk about how we the people are borrowing 1 trillion on our credit cards and we're the problem. That
it's like it's
mm.
like getting people to use paper straws, but then having the container being plastic, right? I mean, it doesn't really do
Yeah,
anything. I was
it doesn't.
like when you go to there are certain restaurants where if you go, you get a drink in a plastic cup and they give you a paper straw. It doesn't make a difference.
Yeah.
But that's what this is. People they're trying to lower the interest rate. Sorry, they're trying to increase interest rates for people, but people are already so far in debt that their debt's just going to keep increasing, right? And
Yeah.
I was looking at somebody posted something where the interest rates for variable rate mortgages in Canada have gone up so much that people's amortization doesn't even say a year anymore.
Oh,
It's over 30 years because they've
oh my
added so
God.
much. The interest on their payment is more than just if they put anything towards the principal. They have nothing they're putting
Wow.
towards it. Everything's going towards interest essentially.
Yeah,
And
that's so sad.
that's that's what this interest rate increase is doing. They think that okay, people are going to stop spending, but I mean, at the end of it, I think what's happening is people are just losing hope, and they're
Yeah.
just seeing that the value of my money keeps decreasing. Everything keeps getting more and more expensive. So who cares? At this
Yeah.
point, there's no point in even trying to save. And then you can see here, tax revenue 4.9 trillion.
Yeah.
Their
And
actual spending is
they have that going up, but
yeah,
uh just a quarter or two ago that was actually going down, and I'm not
yes.
sure of the accuracy of that. I've been watching this US debt clock for over a decade, and I really believe at some point in time the ownership changed hands because there's been a few
Oh,
different things they've done here, specifically on the so in other words, what I'm trying to say is I'm not sure that tax revenue is actually going up, and
this
I
right
don't
here.
think it's going up. Yes, and that's really important because that's the asset side of our balance sheet that needs to balance out these liabilities, and the people
Yeah,
can feel it, but the government is not one single entity. So the government's going to recognize it last. So there's no stopping this train. That's where that saying comes from because the
yes,
government isn't its own entity and it's not going to figure it out until it's too late. But I personally believe that those tax revenues are actually going down, not up, which
right.
creates an even bigger problem for the United States balance sheet, which I do want to touch on actually because I think People's Reserve Bitcoin bonds are the solution to the deficit on our balance sheet. We have liabilities outpacing the growth of assets, But we
Right.
also have a need to protect principal, especially when it comes to Social Security. When you were on U.S. debt clock, that Social Security was upward of 27 trillion.
Yes. Oh,
Uh,
sorry. Let me go back, but keep going. Yeah.
and another thing they changed actually in that bottom right section is like the dollar to gold, dollar to crypto they added. Um,
Oh, this
over
part.
on the
Oh, here.
far right. Yeah, yeah. See, so this never used to say 406 to 1. It used to just be like the dollar price per ounce. And now they have it for
Ah,
now and for 5 years and 10 years out based on those different projections of the budget. But these numbers are way off. And I've been watching those. Probably like 4 or 5 years ago, the dollar to gold ratio was already above 15,000. And now
sorry.
both of
Dollar to
their,
gold ratio. Where? Oh, here.
yes, yeah, it was above 15,000. Now
Wow.
they have one at 39 and one at 12. So they changed. It's a lot like CPI. You know what? Let's change things up a little bit. Let's look at this a different way. And analytics aren't that useful if you keep changing them because you can't
Yeah.
measure trends. You can't measure those things. So, this is unbelievable that it's gotten to this point. And we actually, you could see Social Security. That's what I was talking about, the $27 trillion there. What's interesting about Social Security is that it's actually not part of the U.S. Treasury balance sheet. The Social Security is a fund. It's actually two funds, and they're their
Mhm.
own entities with their own balance sheet with assets and liabilities. Liabilities being receivers, and the assets being those who contribute. So the problem with Social Security, and everybody knows this, but Trump hasn't talked about it. Kamala, I don't even know. I don't even know if she knows about it, to be honest. But none of the politicians are talking about it. And the reason is because right now there's no solution to this problem. The solution to this problem has been we're going to keep increasing the retirement age. And in real terms, right? Not nominal terms, but in real terms, we're going to keep reducing the benefit. In other words, the payment you receive from Social Security is going to increase according to the cost of living adjustment, which is tied directly to CPI. So the average payment this year was 1,800. The average payment next year might be 2.5% more than 1,800, but prices went up 11%. So the quality of life and the standard of living that Social Security can provide is crashing and burning because the increase in the benefits is not keeping up with inflation. So therefore, in real terms, the value of what you're getting back is less and less and less over time. And there's really no way to fix that because the liability side of the balance sheet is growing much, much faster than the asset side of the balance sheet. And you can't just take Bitcoin and add it to that side of the balance sheet because at some point in time, and we're kind of getting to that mark now, at this point in time, this year, Social Security paid out $100 million more than it collected. So it's already
Wow.
going net negative, where this is already a problem here today. But at some point in time, you can't just add Bitcoin to the asset side of the balance sheet because you're gonna have to sell those Bitcoin in order to meet the liability to pay out the receivers. So this is where the People's Reserve Bitcoin bond comes in as a new product, new financial product built around Bitcoin equity, built around Bitcoin, the most pristine form of collateral in the world, in order to fix some of these issues. And what we do at People's Reserve is we take Bitcoin and we package it into what we call a principal protected note. And I'll just use $1 million to keep the example. Well, let's go to $1 billion so that at least it's more realistic to some of these programs,
Mhm.
right? Because
Yeah.
$1 million, they spend that $1 million every second, right? So if the Social Security was going to do like $1 billion Bitcoin bond or what we call a principal protected note, we call it Bitcoin bonds because it's easier for people to understand. But in actuality, that $1 billion would be raised by the Social Security tax. So they would collect $1 billion in the Social Security tax, which they would then invest into the principal protected note or Bitcoin bond. 80% would go into 5-year US Treasury notes and call it 4.5%. The other 20% or 200 million would go directly into spot Bitcoin. And that Bitcoin would be held by the fund itself because now the Social Security Fund, which is its own separate entity, holds the Bitcoin bond on the asset side of its balance sheet. Now, what's really important here is over the course of 5 years, the 800 million that you put into the US Treasury notes, they mature at a $1 billion value. That's where the principal protection comes from. So Social Security can't go net negative, right? They can't hold through a Bitcoin cycle and watch that value go down. There really can be no downside. And that's what the principal protected note does. It eliminates the downside because even if Bitcoin goes to zero, which you and I know is not going to happen, but even if it did, some of these big fund managers, people in government, they believe that's a possibility. So if Bitcoin went to zero, you still have the $1 billion of Social Security tax that you collected because the 800 million turned back into the 1 billion through the debt note. What's left
Right.
over is the performance of Bitcoin. And this is where it gets really interesting because even if the price of Bitcoin goes down 50% over the next 5 years, which is unprecedented, there's no reason for that to happen. And I don't anticipate that to happen, just like I don't anticipate it to go to zero. But let's just
Right.
say it did. For some reason or another, it went down 50% in the next 5 years. When you combine that performance of negative 50%, you now have $100 million of Bitcoin. Well, when the note matures, you sell it. So the note matures with a value of 1.1 billion. In other words, that's 10%. So in simple interest terms, 10% divided by the 5-year note is 2% APY. So even if Bitcoin goes down 50%, you're still getting 2% APY on a principal protected note, aka Bitcoin bond. Now, what's interesting is the Social Security funds last year in 2023, their effective performance rate was 2.4%. So, what's the risk reward of what we're getting here? If they do a Bitcoin bond to fund Social Security to try to save this, or at least maybe you just do it to end the program. That would be what I would call for. Let's recapitalize Social Security so that we can end the program and then let people save and invest in their retirement on their in their own means. But at least the promises we made are not going to be broken and we can let this thing come to an end. So if Bitcoin price stays the same, you're at 4% because you had 200 million and 1.2. So it's a 4% APY. That beats. So if Bitcoin price stays the same, you beat the performance of the existing fund. Now, if Bitcoin does what you and I and people who are delivering orange pills understand and believe it's going to do, and it goes 5x or 10x, you're talking upwards of 20 to 40% APY. That is a solution to fixing Social Security. And not, again, I don't want to fix Social Security to keep it around. I think we fix Social Security in order to come through on our promises and then end it. But there's no other solution for this. There exists no other solution for this. And there never was a solution for it because we're only in year 15 and we're just now starting to understand the power of engineered money and how we can
Yes.
leverage that engineering to fix some of the problems that this fiat system has created for all of us.
I actually have a spreadsheet. This is for stocks. So if you had a certain allocation to stocks versus Bitcoin, not exactly like what you're saying, but the return that I considered here was 7%. But let's say you go with a 20%, you go with 20% allocation to Bitcoin and 80% to stocks. And then these are the assumptions that I made. So I made the assumption that you'd have a 20-year time horizon, you'd have 35% returns for 10 years, then 30% for 10 years after that. You would end up with, if you go with a 20% allocation, you'd end up with 97% Bitcoin, right? And then this includes stocks getting a 7% return instead of 4.5. So it would be even higher with the example that you gave us. So if you hold for 20 years, it might be closer to 99%,
Wow. Yes, this
right? And
is
then,
this is this is really good. This is a really good sheet right here.
yeah,
This
it's
right here. Everybody should be understanding exactly what we started this conversation out. You save in Bitcoin, and over time, the value of your net worth in Bitcoin increases substantially, which makes it easier to live life and to enjoy it. This is a fantastic sheet here.
that's exactly what it is. And then I think the good thing here is that I had a conversation right before you. I had another conversation where she was saying, so it was Lauren, one of my friends. She's a huge real estate investor. She has an allocation to Bitcoin, but it's not that big. So I showed her 1 to 5%. You have a 5% allocation in year one, you end up with a 88% allocation in year 20.
Wow,
And
this
that's
is
a 5% allocation.
the,
It's insane.
what people don't understand is that if People's Reserve cannot convince the federal government, or we cannot convince the state of Florida or some of these other sound money states to issue municipal Bitcoin bonds, the very next people in line who are already chomping at the bit are insurance companies. Because when you show this sheet to an insurance company, raising interest rates broke the insurance model. That's why they've had a
Mhm.
lie about the everybody out there knows it. Your insurance rates have increased substantially. Why? Because the insurance, they collect the premiums, they take the premiums and they put it in cash equivalents, AKA US Treasury debt. So when they
Yeah.
raised the interest on that US Treasury debt, the price, the mark to market price went down. Now, sure, we had the bank term funding program. So when customers wanted their money from the banks to go from the banks to the money market funds, and the bank said, well, we don't really have, we can transfer your liability to the money market fund, but we don't have a corresponding asset that matches that value to transfer with it. So we got a big problem here. Magic happens. They create inflation. They create the bank term funding program, but they never created the insurance term funding program because now you get a hurricane, you get a storm, you get a fire. Well, the insurance company had to liquidate at mark to market value the underlying collateral, which was the treasury debt, at a loss because they bought them at very low rates and were holding them, could not hold them to the maturity because there was a claim that needed to be paid. So now not only are they losing from the claim that's being paid, they're losing from the mark to market value from par to the current interest rate. And so when an insurance company comes in and says, well, hey, this is interesting because we can't lose money, which means we can't just buy Bitcoin and put it on our balance sheet because we don't know when our customers are going to need that money. And if they need that money, we need to sell and Bitcoin's down, we can't have we can't lock in net negative losses. The same thing they had to do when they raised interest rates. But you throw in an insurance company that runs on Bitcoin bonds, and all of a sudden you have principal protection. So if you need to liquidate, you can sell in the secondary market at par value, or even more, because even if Bitcoin doesn't perform, it comes down 50%, you're still talking about the 2% APY. So now the upside that you see in this beautiful sheet that you've created now is applied to the insurance company's treasury. So I think regular insurance companies, I can't say too much. I'm still under NDA, but let me tell you, they are chomping at the bit to get their hands on this tool because it optimizes their business model. And that's what Bitcoin does. Bitcoin has an engineered money. It has so many second and third order effects. I just heard uh, somebody say it the other. I forget who it says that you'll never be a Bitcoin expert. And I said, dang, that person actually really knows Bitcoin because the more you study Bitcoin, the more hours you dedicate to Bitcoin, the more you start to understand there's first, second, third, fourth, fifth, sixth order effects to everything, not just money, but business planning, business models. It all changes when we move to a sound money. And that's what I'm passionate about. That's what I'm excited about. I see a big change coming for humanity as we shift away from this fiat system that's based on value extraction over to a sound engineered money system which delivers value to we the people.
Do you have any thoughts on what the most important downstream effect of Bitcoin is?
Yes. And
Let me give you my example. My
yeah,
example is
okay.
real estate prices coming down. I'll just to give you some time on thinking, but I think that real estate prices are going to come down. Well, I mean, I'm sure you agree on this, but essentially what I think is that real estate investors are going to realize what Bitcoin is. They're going to figure it out, and then they're going to move their wealth from, let's say, real estate, from all these houses that they have. I don't know if you know about this, but there's a stat that I read said 15 million houses are unoccupied in the US, right? And just that alone, if those houses go on the market, what happens to the price of real estate? It drops, right?
Yeah.
I think that's the most important to me, just because it means that more people can buy houses, people can be stable for their future. And when they're stable, I think that leads into other things where they can be more creative, they can spend more time with their families. Who knows what other impacts this have? What are your thoughts?
Yeah, I think you're spot on, first of all. The effects on real estate are they have to be one of the most important because it's part of our hierarchy of needs, right? We need that
Yes.
place to live and build a family, and all of that feeds into the culture and society. So yes, I do think from a financial perspective, the understanding that the value of real estate is crashing against Bitcoin. And one of my most viral posts ever was my testimony of my real estate experience, where I bought my family home. Oh God, I try to forget it all because it really grinds my gears. I think I
Hmm.
spent upwards of like 60 or 70 Bitcoin to buy a single family home. And
Hmm.
today I wouldn't even get 10 Bitcoin for my home. So
Yeah.
my neighbors, it was during July 4th, my neighbors were out. I came home and they were having a good time. They called me over to come have a drink and grab a hot dog and just hang out. And they said, um, how do you feel about the house? This is your fourth or fifth year in the house. Are you liking it? Are you liking the price performance? You got to feel good that you're doing better, right? And I said, well, even though I bought my house, and it's up 100% in dollar terms, I'm down over 90% in Bitcoin terms. So although the world would like me to feel more rich because my house is worth more dollars, I've actually become absolutely destroyed in Bitcoin terms. And my unit of account is Bitcoin. So to be honest with you, I love the neighborhood. I love my neighbors. And I'm very thankful for my home. But man, I made a really bad decision on buying this home with Bitcoin.
But
So that
I
that
think you'll always make a bad decision buying home with Bitcoin though.
yeah.
That'll
Yeah.
never change.
No, it won't. And I think we should dive into that actually. I think we should dive
Yeah,
into my thoughts on that. But before we do,
absolutely.
I do want to just add what I think the most important downstream effect is going to be because I think there is no most important. I think you're right. Real estate is one of those top things because of the hierarchy that we're looking at right now. But I think another important downstream effect, and this is a really interesting study, and you might even come across it because I know you put in thousands of hours into this. And when you look at Weimar, you look at Greece, or you look at Rome, it's very interesting to me that the amount of people who were confused about morality, they were confused about uh, their sexual escapades, they were confused about whether they were a man or a woman. Um, this all comes back down to the money because when
Hmm.
and this is why here in the United States, our service industry is falling off a cliff because people understand, wait a second, 4 or 5 years ago, I'd come in and if I made $300 in tips and night serving, I'd be sitting pretty, man. I have some extra money to go party on the weekend. But now I'm making $400 a night serving tables and I have nothing left over. I'm making more money and my quality of life and standard of living is going down. And what that does is they're not happy when they go to work. They don't really
Hmm.
want to serve you because they feel like the value is being extracted from him. So people become less kind to each other. People get into really bad depression modes because they're in their own personal death spiral, right? The United States is in its
Yes.
death spiral, but like you stated before, a lot of people are also stuck in that spiral. And that's why the law allows you to claim bankruptcy. There's a mathematical point that you get to where there's nothing you can do. Doesn't matter, unless you hit the lottery, which you're not going to do, there's nothing you can do and there's no escape. So they let you restart. Well, a lot of people are reaching that level or starting to understand that they're reaching that level. So I think one of the most important downstream effects besides real estate is the state of mind of the people. How we look at other people, how we judge other people, how we treat other people because of the economic situation that we're in. And when people
Hmm.
work hard and aren't rewarded for that work, everything falls apart.
Yeah.
Everything. So I think that's probably, real estate it plays into that too, because that's where you build your family.
Yeah.
A lot of people don't feel comfortable proposing to their girlfriend if they don't have a home to build a family in. So all of that stuff changes and it increases, it has an effect on all of us. I mean, because where we're going, who cares if you and I are Bitcoin billionaires? If we need security teams walking around us 24/7. Like
Yeah.
what's the point of that? I'd rather not have a $1 billion purchasing power, but be able to take my family to the park and enjoy the beautiful weather and watch the river and fish and feel safe. I give up purchasing power and wealth to feel safe. And I think that's what Bitcoin's going to do. It's going to reward those who work hard, who put in the proof of work, and it's going to create a system where that hard work is rewarded. And the people who truly deliver value to other people then in turn receive value. And that creates a healthy mindset and psychology of the people. But I love that question. Great question.
And I think there's another impact of that where even if you don't adopt Bitcoin, you're still better off because eventually, let's say, I mean, this people are going to have to actually work on this, but they're going to have to want to accept Bitcoin for their wages. But eventually, if things go the way that I think they will, I think people will want Bitcoin because why would you want paper in exchange for your time and your energy? Eventually, people will want it. And the good thing is here that you don't need to invest anymore. You don't need to dedicate half your life to figuring out how money works. All you do is save. You just keep it in your wallet and you're good to go. And over time, I actually this is probably maybe a third level effect. But essentially, what it'll do is it'll give individuals the ability to invest in their own businesses.
Mm.
And I think this is going to lead to maybe a collapse of a lot of companies in the S&P 500. I think the S&P 500, the traditional stock market that we see, is going to have some serious competition from small businesses. There was a business, Tahini's. I don't know if you know
Mm.
about them. They're on
Yeah.
Twitter.
Yep.
They make shawarmas and they started stacking Bitcoin. And now they'll probably get through any recession, right?
Yeah.
Because they've been holding for 4 or 5 years. They have the savings and they know for a fact that they don't need to make immediate impulse decisions by investing in some random thing that they don't need. Now they can just hold on to Bitcoin. And if an opportunity comes by, they can invest in it.
Yeah, absolutely. Very well said. And I think you're spot on. There's no doubt in my mind that if people understood how many zombie companies were publicly traded, there'd be a revolution tomorrow because
Yep.
they're, they don't understand what they're a lot like Bitcoin is heading this direction too. People are going to own and benefit from Bitcoin without even knowing that they own and benefit from Bitcoin because the companies
Yep.
that are indexed are going to have it on their balance sheet. So everybody
Yes.
that's where that, everybody benefits idea comes from and I concur. But yeah, the businesses who pull a micro strategy and fully embrace the power of this engineered money are going to benefit the most. And the amazing thing is that some of them they won't need investors because they will
Yes.
just have the purchasing power. That one of the big kickbacks is, well, who would invest? Who would, Jack Mallers the other day was talking about how Bitcoin, he considers Bitcoin a different business line. And over the last 10 years, we've had 60% CAGR. So what's the opportunity cost? What's what am I going to spend that Bitcoin on that's going to produce more than 60%? Forget it. I'm not going to
Yep.
build the business. I'm just going to hold the Bitcoin. But like I said, the longer you hold that Bitcoin, the easier it is to open up a new store. The easier it is to hire more employees. So it's a push shove thing. But my position is this, and I believe I kind of Twitter stalk you because I just love your content. I love
Appreciate it.
your line of thinking. It's fantastic. It really is. Keep up the great work. It gets me thinking, and I love that. And I think one area where we kind of will butt heads a little bit here, so it'll be fun to get into this because I want to get
Of
your
course.
opinion,
Love it.
is money and currency are both their own tools, right? And you can use these tools together to be more efficient. So I think that the dollar is going to be around for longer than people are anticipating. And what that does is it creates an opportunity where when Tahini's is ready to open its new store, it shouldn't sell the Bitcoin. It should just borrow currency against its money and then invest the currency because the new restaurant isn't going to produce what Bitcoin's going to produce. And as long as the CAGR of Bitcoin is higher than the rate of which you're borrowing against it, that is actually my definition of yield. So a lot of people think, oh, to get yield on Bitcoin, I need to lend it to other people and introduce counterparty risk because it's the introduction of counterparty risk that produces the yield. Wrong. The way you get yield on Bitcoin is you borrow against your own Bitcoin and you're getting paid yield in terms of purchasing power because the burden of your debt is shrinking. And Michael Saylor is putting
Yes.
on a masterclass on how this works. It's unbelievable that other companies are just, it's the best performing stock. I believe since 2020, it's the best performing stock in the world. It's even more so than Nvidia. So this works. He is proving that it works as long as you have the right mindset, as long as you have that mindset of where we're going in the long run so that you don't get weak hands and get afraid. And I mean, imagine if he got afraid after FTX collapsed, right? He could have very easily gotten afraid and started to liquidate, but you have to
Yep.
understand what you're doing. But when you understand that Bitcoin is money and that money is not currency, and that currency, like you said, is going to continue matter of fact, just before we hopped on, I got a notification of your tweet, and it was like, Bitcoin's going to 1 million because the dollar is going down. Bitcoin's going to 100 million because people are going to realize that they don't want to hold their other assets, right? So you're trying to show people that, the dilution of the dollar is going to bring us to 1 million. But once we get to 1 million, people are going to start to understand what Bitcoin really is, and they're going to start to solve everything else and get it into Bitcoin, and that's what's going to bring us to these huge numbers. But through that transfer of wealth, through that process, really we are empowered to borrow against our Bitcoin versus selling it. Now, I think after this transition takes place, you're right. Now we start spending it. But as we go through that transition, it would behoove us to understand how we can borrow currency against money and earn yield in terms of purchasing power with that methodology. What are your thoughts on that strategy?
So I agree with you. I think in an idealistic world, for banks, that'll probably happen, but I don't know. Why would banks want to? Okay, so the way that I think of it is why would banks want to lend you money and give you all of your profits from holding your Bitcoin when they could do it themselves, or they could give that money to their buddies and they could share that Bitcoin yield with their friend? Why would they, not Bitcoin yield, but Bitcoin growth? Why would they give you that money at a low interest rate unless interest rates go up? I don't think it makes sense for banks.
Yeah, well, a lot of what the banks do don't make sense right now.
Yeah,
But that's
because they can
that's
print
why
money, of course.
right. So that's why decentralized finance is so important. And I think a lot of what happened in the ecosystem with fruit farming and all this stuff, these are all scams. These are absolute scams.
What
Nobody
do you mean?
should remember when we went through the DeFi boom in like
Oh,
2018,
right, right,
twenty
right, right.
nineteen? It was like, oh, I'm farming yams and watermelon and like all it's like you guys are just
Digitally.
this is a joke. But you know what came from that? Aave, Maker, all these
Yeah,
protocols that are going to be around for a long time to come because there's a financial concentration. So yeah, you're not going to be able to go to a big bank. And actually, I thought it was very interesting during the Bitcoin 2024 conference. Cantor Fitzgerald announced they are getting into Bitcoin lending.
yes.
So, and the reason that they're doing that, and the reason that the banks will be interested in this, in my opinion, is because it's riskless lending, right? So
Right.
if you underwrite a mortgage, and someone defaults on that mortgage, the cost of figuring out how to liquidate that property, how to foreclose on that property. First of all, it can take up to 18 to 24 months to complete that process. And most of the cost of that process is going to wipe out just as much as the default. So sometimes it
Yeah.
could be like a double default because they defaulted on 250K. Well, it takes 250K over the next 2 years to get the money back. So you by the end of it, you get the 250K you're owed by liquidating the property. Then you have to turn around and write a check to the lawyers for 250K. So nothing
Yeah.
comes from it. It's high risk lending, even though it's secured lending against real estate. And it's still like that, which is why the banks don't keep the mortgages on their balance sheet. They package them together and sell them to the suckers because they know the reality of it. But with
Yeah.
Bitcoin lending, when you post Bitcoin as collateral, and if you default on that loan, first of all, it's over collateralized, right? So you're borrowing less currency against the value of the money. And then if it gets to the point where that loan to value ratio isn't right and you get liquidated, that's the risk you take as the borrower. You can
Yeah.
lose your Bitcoin. But if you do it, you know, you, if somebody has their savings and they have $100,000 in savings, they should not borrow $70,000 or $60,000 against their savings. That's just stupid. But if you have a large sum of Bitcoin because you've been in the market for a while and it's increased your purchasing power, and now you can borrow a very small amount of currency against the large money purchasing power that you have in order to go on a business venture or increase your cash flows, one of those ventures, it makes a lot of sense. It makes a lot of sense for the borrower, but even more important, it makes a lot of sense for the lender because everybody wants to borrow money, but only if the lender wants to lend the money are you actually going to get anything. So
Yeah.
when the lender has an over collateralized position and on top of it, a position that can be closed in 10 minutes with 10-minute block times, that's very low risk. That's very
Yeah.
low risk and very high reward. So I do think the banks are going to get into uh, loans against Bitcoin. Cantor is kind of leading the way, but I also think that decentralized finance is going to play its role for people who don't want that. They'd rather have code as the middleman versus a traditional uh, banker or broker as
Bank.
the middleman. But I do think you are right. It's there's a understanding, right? These guys are coming from the fiat maximalist mindset versus the Bitcoin mindset. And the God's honest truth is they flip the system upside down because they are the biggest borrowers, right? When you and I
Yeah.
deposit our money at the bank, we are lending them our money. That's why they pay us
Yes.
interest. So the biggest
Exactly.
borrowers in the world are governments and banks. They're the two biggest borrowers. So, of course, the system has been manipulated to benefit the borrowers and to hurt the lenders because real interest rates are negative. They're paying us
Yep.
a yield that's less than the inflation rate. We are losing in real terms. They are winning in real terms. So, we need to do the
Right.
same thing, but with Bitcoin being borrowed against versus our credit score or our real estate property, and we can experience those same benefits, but in a sound economic system versus a manipulated one.
I have okay, so I have more pushback on that. I get it. Lenders benefit, borrowers benefit. But what if merchants don't want dollars anymore? What
Mm,
if, because I mean, there's going to be merchants that are going to give you discounts for buying in Bitcoin. I mean, Saifedean is already doing that with his books. Um, it kind of it kind of makes me think once people figure out what this is, they're not going to want dollars anymore, right? And why would you, if you had the choice between getting paid in dollars versus paid in Bitcoin, would you rather get paid in Bitcoin? I personally would,
oh
right?
yeah,
If I just
absolutely.
had the choice, if I could choose between getting paid and if I could give somebody a discount of 10, 15%, I'd rather have Bitcoin. Because
Yeah,
dollars to me, I'm gonna have to convert them at some point. I'm gonna have to pay taxes on that the income. If I just keep it in Bitcoin, of course, I have to still pay it and I have to pay taxes, but I don't have to convert it. I don't have to go through that process. I don't have to pay the spread. What do you think about that? Do you think that that could be a problem? I also think that if we lend too much against Bitcoin, it's going to blow up the entire system, right? Because it's going to add more and more dollars to the system as we borrow more. It's not like we're creating more goods and services. It goes right back to the system where you're borrowing against your real estate. If you borrow against real estate, of course, you get to keep the asset, but you're not. I don't. I think a lot of real estate investors don't like this, but when I say this, but I genuinely think as a real estate investor, as a landlord, you're not really creating value. All you're doing is you're holding onto a property and you're lending it to someone else. They can borrow it. They try to compare it to grocery stores, but I don't quite understand that comparison because as a real estate investor, you still keep your real estate. As a grocery store, you give away the food that you're selling. So I think that this is going to cause more problems for the legacy system. I don't know, maybe this is something that maybe I'm wrong on this, but I think this is going to cause even more problems. It's going to lead to even more inflation. It's going to lead to more dollars entering the system and really breaking the entire thing apart. Thoughts?
yeah. I love both of those pushbacks, and I want to address both. The first pushback, I'm trying to think which one I want to kick back on first because when you hold Bitcoin on your balance sheet, inflation becomes your friend.
Yes.
So I agree with you. I think that an astute observation that this type of mechanism would create more inflation and would expand the rate of credit expansion of dollars, which is inflation. But when on the asset side of your balance sheet you have an inflation protected asset like Bitcoin because of absolute digital scarcity, the inflation itself actually starts to benefit you. Now,
Yes.
let me explain this in terms of people's reserves, principal protected note Bitcoin bond. It creates a positive feedback loop for the Social Security Fund, or for the insurance company, or for Tahini's, or for whoever has it on their balance sheet. Because what happens is you issue that first bond, and what it does is it creates demand for Bitcoin because a portion of the raise has to go into spot Bitcoin. So that demand on Bitcoin forces the price of Bitcoin to go up. Well, the price of Bitcoin going up actually increases the yield of the bond. And when the
Yes.
yields go up, there's more demand for the debt. So when there's more demand for the debt, you issue more debt and then you go buy more Bitcoin. And then the price goes up again, which pushes the yields up, which creates more demand. So you get a positive flyback wheel where all of a sudden, the more money the government borrows, the faster Social Security is fixed. The more
Yes.
credit that's extended, the more profitable the insurance company becomes. The more inflation that's created, the faster Tahini's can open up a new restaurant. So it takes the fatal flaw of the fiat system and turns it into your weapon, turns it into your sword that empowers you. So as we go through this transition, I think that there's an ability to leverage that reality, and that's my pushback on that first part. But I agree with you on your first counterpoint. After we get through the transition, like after people drop dollars altogether, like when dollars see, in my study of fiat currencies, I found that even though they mathematically try to define hyperinflation as 50% per month, that's bogus. There it changes with each culture and society and economy. There's no mathematical point where you can say, this is where we transition from inflation to hyperinflation. However, across all of that time and space and across all of those economies and cultures, there's one thing in common, and that is trust. And in my opinion, what I've learned is that the only difference between inflation and hyperinflation is trust. So when we get to the point where people lose trust, then yeah, I agree with you because they're not going to want those dollars. So why borrow dollars against your Bitcoin? Because where are you going to be able to spend them? So I think that you are correct in the long term after we have mainstream adoption.
Oh yeah,
But
of course.
in the short term, as we're going through this, the worst thing you can do, in my opinion, is sell your Bitcoin. I don't think anybody should be selling their Bitcoin. I don't think anybody who's alive right now should even be selling their Bitcoin until it's known that we are at the top of the S curve of adoption. Nobody should be selling their Bitcoin because what you're doing is you're missing out on an unknown amount of purchasing power increase because you hear people's different opinion all the time. Oh, it's going to go to a million. It's going to go to 5 million. It's going to go to 10 million. It's going to go to 20 million. Yeah, but what if it goes to a billion?
Yeah.
We don't know where it's going to go because Bitcoin has no top because fiat has no bottom, right? So you don't want to try to time the market. You just want to realize that, hey, when those dollars are laying worthless in the street, then yeah, this strategy is not going to work. But until then, the strategy is going to work really well. And something else that goes along with that is, and I draw the parallel to gold, and I still think about this every night. It's like that meme where you're laying in bed next to your wife and you're turned the other way, and it's like, I wonder what he's thinking about other girls, and you're just like, huh, will borrowing against my Bitcoin really benefit me in the
Yeah.
long run?
That's
But,
good.
you know, gold had this same problem, which is it needed a layer two solution in order for the monetary velocity to increase, right? Gold was a great store of value. And that's really what brought it to the stage because it was scarce and it was not easily replicated or found. And the circulating supply was hard to increase. So you could store value in it. Once people understood that, then they wanted to spend it everywhere. But when they wanted to spend it everywhere, what are they going to weigh it out? Are they going to chip it off? Are they going to melt it down? No, they needed an L2 solution. And that L2 solution was bank deposits and debt
Yes.
notes, right? So it's interesting to me that that worked really well. I mean, it worked so well that Nixon actually had to remove the gold standard because there was such a high demand for these debt notes, for these demand deposits, that they expanded at a rate that was greater than the amount of gold that they had. So the demand for a technology that could allow monetary velocity to increase is something that we still don't understand to this day because Nixon didn't let it play out. He just removed it because it was a big problem. It's interesting to me that Bitcoin now faces the same problem. It's very clear that in just 15 years, which is absolutely amazing for anybody who's studied monetary history to understand how long it took to go from big freaking
Yeah.
yapstone rocks to gold, and then for gold to penetrate the market and people to have this understanding for 15 years for where we are is absolutely mind blowing that we are in the store value phase right now. But we need to get to that medium of exchange. We need to get to that point where, like you said, people aren't interested in dollars anymore. Isn't
Yeah.
it interesting that dollars are actually the most effective L2 solution right now? You see Lightning Network pretty good, Liquid pretty good. I'm a fan of the Stacks blockchain and SBTC. I think that's going to be a pretty good solution. And I think there should be multiple solutions. I'm a free market capitalist, and I think the market will use a different solution for whatever its need is. Some solutions
Of
will
course.
cater to other things better. And the free market will do what it needs to do, and there should be multiple solutions. But right now, it's clear to me that the best L2 solution for Bitcoin is actually dollars. So when Trump comes out and says, and this went over a lot of people's, I have not seen anybody else on Twitter talk about this. Trump made his announcement, and everybody said, "Oh, first of all, it was overshadowed by RFK, right? Because RFK had nothing to lose, so he can come out and say the most extreme things that we would dream that Trump would say." And RFK did
Right.
a great job, and I'm really glad he's taken multiple orange pills. Um, but man, what he said really took away from what Trump said because Trump couldn't make as such radical statements because, first of all, he's a politician and he has to reach out to both sides of the aisle here. But what Trump said and what everybody focused on was that we'll have a strategic stockpile reserve, right? A strategic reserve. And that was the big announcement. But something he snuck in there that went over a lot of people's heads, and you can't blame him, is that Trump said that he would expand the dominance of the dollar through stablecoins. That is a really important concept, especially when you look
It
at
is.
Tether right now. Tether, for the longest time, people said if you don't have a fractional reserve bank, you can't make any money. Well, Tether made more money than BlackRock. So I think they're doing pretty good. And they're backed 1 to 1. Now they're not backed 1 to 1 with all cash equivalents of US Treasuries, but if you go look at their attestations, it's pretty close. So they have a fully reserved bank, so to say, and it's
I think it
profiting
was like
more than
77%
BlackRock.
or something like that. Was that what it
Yeah,
was? 77%? And then they have
yeah,
Bitcoin, I think they have other cryptocurrencies. I think they've been putting a lot into Bitcoin.
correct. And they even have some commercial paper as well. So I
Right.
definitely recommend if you hold Tether to go look at their transparency page to understand what's backing that token. But what you need
Hmm.
to understand that it is backed. And when you talk about the major banks, it's not backed. There is
Yes.
a lot of people don't know this. The reserve requirement since COVID is zero. Like they have a hard time believing that. It's legit. Go look it up on the website. It's
Yeah.
zero, and they've never changed it. So people need to understand like the bank term funding program is a perfect example that hey, banks hold reserves according to their own risk profile. They'll look at Basel banking guidelines, they'll look at different risk portfolios and strategies, but really it's up to that bank to decide how they want to back your deposits and what tools they want to use to back those deposits with. And there's been
Yeah.
somewhat of a marriage between the government and the banks because the government said, "Hey, we need yeah, we need to borrow a lot of money. And if we keep issuing treasuries, that's going to push interest rates up way too high. So
Yes.
we need to get everybody's money." And the bank said, "Well, hey, we're holding everybody's money. So why don't we let you borrow everybody's money? And then, we'll perform some custodial arbitrage here. We'll lend the money to you. That'll be the asset that backs the customer's deposit liability. And hey, we make billions for just being the middleman. This sounds like a good deal." Well, that's not how it's gonna operate and how it's gonna work. But I said all that to say this. Trump said he's going to expand the dominance of the dollar through stablecoins. I think that was the most important thing he said at Bitcoin 2024, even more
Yeah.
important than the reserve, the stockpile reserve. And the reason is because in my opinion, dollar is a currency and the dollar is actually the best L2 solution for Bitcoin right now. It allows for monetary velocity based off of Bitcoin equity when you borrow against it. So I think there's
Right.
a very interesting dynamic that's taking place right now. And the other exciting thing is, and what a time to be alive for both of us, because this is a big experiment. We have no idea what the hell is going on. People talk about trust the science. This is science. We are hypothecating and looking at the results and adjusting and building new products and bringing things to market. We are in a big monetary experiment right now and is one of the most exciting times in human history because we have a chance with engineered money to get back to a system that empowers we the people, which is the exact opposite of what fiat does. But I sleep at night. I sit there. I'm like, man, are dollars really the best L2 for Bitcoin?
Yeah. Yeah. It's true. I think over time we're going to see more and more people figuring out what we see. I think we're going to see more and more people realize that this thing is being battle tested and it's going to keep getting battle tested until we figure out the perfect solution. And I don't think that that's ever going to happen. I think there's where we're going to continue to try looking for better solutions. All I know is that let's say 10, 15, 20 years from now, it'll be better than it is today.
Mm.
There will be more L2 solutions. Who knows? Maybe the dollar is going to be even better, maybe even bigger than what it is today. I still think that the dollar's demise is coming a lot sooner than people think. I
Mm.
think, I mean, for all we know, Bitcoin could be $1 million by December 2024. I'm not saying it's going to happen, but for all we know, it could happen, right? It could be at $1 million by the end of December 2025. It could also be at $10,000 by the end of 2025. I think the most important thing here, though, is just understanding where this could possibly go based on what we know, based on all the facts that we have. I agree with you. I think that uh, working with having money with fiat currencies is a great thing, but I also think that the fact that Bitcoin can be moved around is a benefit and it makes a society much more equal. It gives everybody the ability to accumulate assets because right now, let's say um, if you borrow against your real estate, if you buy a house and then you uh, live in it for a bit and then you build some equity instead of having to sell it, you want to buy a car, you can just borrow against the equity. The problem with that I have is you can delay gratification and you can get instant gratification at the same time.
Mm.
And that's a problem to me because whoever's getting the instant gratification is, of course, enjoying their life, but then they're also able to delay gratification and they're able to use somebody else to pay for their expenses. What do you think of that?
Yeah, that's a good point. Now the first thing I want to say is that I don't think Bitcoin going to $1 million is that crazy. So for anybody
No.
who listened to what you just said and said, "Hey, December 24 or $1 million, what are you nuts? That's a couple months from now." Or
Yeah.
December 2025, that's a year from now. Look, during the COVID crisis, Bitcoin crashed to $3,000. It went 20x to $60,000 on the back of lowering interest rates and quantitative easing. We are now moving into another period of time of lowering interest rates and what will soon be in order to keep those interest rates low while the government has to issue more debt to finance their deficit spending. Remember, the more debt they issue, the more upward pressure there is on yields. So they have to have a quantitative easing program to buy the debt in order to keep the yields down. So we are going into that same regimen, lower interest rates and quantitative easing. That pushed us 20x from 3,000 to 60,000. Well, roughly we're at 50,000 right now. And on the back of those same policies, declining interest rates and eventually quantitative easing, if we do the same move of 20x, 50,000 times 20x is a $1 million Bitcoin. So it's the same mathematical measured, 3,000 to 60,000 doesn't seem like it, but it is the same mathematical move from 50,000 to a million. So yeah, I think that's you're spot on. People need to realize this thing can move a lot faster than anybody is anticipating. Now, the second thing that stuck out is you said that maybe the dollar becomes stronger. And see, as an American, I don't want to see the dollar die. Like I hate the dollar. I keep my rifle in the car. I'm ready to go. Let's get back to the constitutional republic of the United States of America. Don't get me wrong. People who follow me understand I am a Bitcoin maxi. Bitcoin is the only money in the world, but there's also money is a tool and currency is a tool, and they both play their role. And I'd rather see the dollar dominate than the yuan or the ruble or any other fiat currency. And I think what may happen here is we might see that come to fruition. The dollar is struggling now because we see these other countries are pivoting. We see BRICS fighting against it with their gold backed currency, with that they haven't really announced. We don't really know all the details on that. I'm very interested to see when they finally announce that what it is, because as far as I'm concerned, they could be adopting Bitcoin for all we know. But
Yeah.
they say one thing and then they do another thing. We know that's what countries and politicians do. So I'm not necessarily convinced that it's a fully gold backed currency. But if it is, I think they made the wrong choice, which is actually a blessing in disguise to us here because we can adopt Bitcoin. And if we adopt Bitcoin as an asset on our balance sheet and we're issuing dollar liabilities against that asset, now we're right back into that positive feedback loop. So now the rest of the people in the world are going to say, screw BRICS, forget the ruble, forget the yuan. I don't want any of that shit. I want the dollar. And we see that in a lot of countries right now. Stable coins, are really a way for people to get safety relative to their home fiat currency, right? Because the dollar is always called the cleanest shirt and the dirty laundry, right? So we could actually see the demand, even though the demand for dollars are slowly dwindling now because of the government deficits and the massive inflation that's taking place. If the right decisions are made and the government adopts Bitcoin strategy, the demand for the dollar could shoot through the roof. And then when the demand for the dollar shoots through the roof, when the dollar gets too strong, that actually enables us to print more dollars. That
Yeah.
is a benefit of being the global reserve currency. That when the economy is, that's where the 2% inflation target comes from. Like, how's that a stable target? It doesn't make any sense. Well, because the idea is that the global economy is growing at a rate of 2%. And if we don't meet that growth, the dollar will become too strong, which creates a bunch of problems in the currency markets. So there's that dilemma where we have to, at some point, you have to dilute because of the strength of our economy and the strength of our dollar and the demand for those dollars because of all the dollar denominated debts within the system. So I think, I would take the opposite of that and say, hey, I think you're onto something here. I think that we can actually see the demand for the dollar go through the roof as all these other fiat currencies start to fail. Because as
Yeah.
bad as the United States is, these other countries are worse. As corrupt as the United States is, these other countries are more corrupt. So there's very few. I mean, Dubai, Abu Dhabi, these are beautiful places with great tax incentives and smart people leading the way, but they just don't have what we have. And
Yeah.
we have first market mover advantage, and that's the reason they call it first market mover advantage. It's almost impossible to take. So unless we just turn our backs on Bitcoin and completely ignore Bitcoin, then yeah, I do believe the dollar is destined to be end up on the street
Yeah.
and worthless. But if we adopt Bitcoin, we might see what you say, where the dollar sees a whole bunch of new demand and all these other fiat currencies tail off. And that requires more dollar printing, which actually drives more value into Bitcoin, which is now on the asset side of our balance sheet. And all of a sudden, a country that was $300 trillion in debt is now equity rich, is now net positive in the amount of trillions because of the strategy that we employed. So we are at
Yeah.
such an important turning point in all of finance that we really need to. Some people say that, Bitcoin isn't political. I think we need to get more political now than we've ever been. I think I can't wait for people like you and me when we are eligible to start running for these positions and to start helping and to get a voter base already. Crypto. So we need to fix that, right? Not crypto. We need a Bitcoin party, not a crypto party. And I love that it's crypto for Harris instead of Bitcoin for Harris. That tells you
Yeah.
everything you need to know, right?
Yeah.
So we need a Bitcoin for America party, and we need to get our shit together, and we need to adopt Bitcoin, and we need to start integrating Bitcoin into our economic strategies. And if we do that, the demand for dollars is going to go up, not down. And that's going to ensure that we are making some of the most important decisions that are going to be made for all humanity, including Musk's mission and other missions for sustainability. Bitcoin is true sustainability, right? We've been talking a lot about the finance side of this, but I'm wondering, what are your thoughts on Bitcoin mining and the importance that mining plays in the grid and in true sustainability?
I've heard that mining is great for just stabilizing grids. I haven't done the deep enough research on that. I know mining, bringing mining into a country, it incentivizes the production of grids. It incentivizes the investment into the power grid. Um, I mean, of course, that's a good thing. That's definitely going to be a good thing. And then there's also the fact that if needed, miners can be turned off and they can stabilize the grid, something along those lines. I haven't done the deepest research on that. What are your thoughts? What did you have in mind there?
Yeah, well, I think you're spot on, and I think that's without doing a lot of research, you understand what's happening here. But I like to say it like this: Bitcoin mining is the only uh, sustainable human network that actually promotes technology and energy innovation because miners are driven to find the lowest cost of production. So number one, they're going to go after wasted energy. Once they capture that wasted energy, which by the way, we're nowhere close to doing that, but once we do that, now comes energy technology innovation. Now we can
Yeah.
start to move and trend towards free energy. And one of Trump's policies that I strongly agree with and one of his ways of fighting inflation. And this is somebody who understands that Trump in 4 years with no wars spent more than Obama did in 8 years with the nickname of Barack Obama dropping bombs, right? So Trump spent a lot of money. All right. He's not doing what you should be doing to fight inflation. But his policy to fight inflation is to address energy, to lower the
Yeah.
energy costs, to tap into the oil markets and to lower energy costs because energy cost is a line item for every single business. And if you can reduce that line item, then prices can come down while profit margins are maintained because they don't lose profitability. And that's, so I love that he understands that when we reduce energy costs, we can actually bring prices down. Now, I wish he also understood, on the other hand, that the government can't spend trillions of dollars and have prices come down. But you can't get the best of both worlds. But at least he understands the energy aspect. And when you plug Bitcoin into that equation, that's how you get. I mean, if we're ever going to have free energy in this world, it'll be the result of Bitcoin mining. So I
Yes.
think that plays a really big role, not only in stabilizing the security and efficiency of the grid, but also in the financial aspect and the economic aspect and helping to lower costs of production in order to drive these prices down, remembering that lower prices means increased demand. And that's what a strong economy is. A strong economy is more consumption and more production. You can't have
Yeah.
one without the other. You need more production and more consumption. And the only way you can do that is if you lower prices. And tackling energy costs is one of the best way to lower prices. So this is what we were talking about earlier. There's so many different avenues that Bitcoin goes into. It just like it blows your mind how much the world can change if we can just get some people who understand what's going on to get into some decision making positions.
It never ends. You can just keep finding more and more solutions. I think that's it. So we were talking about real estate before. You said you wanted to mention something. I don't think we went into it.
Mm.
Uh,
Yeah, I'm sorry.
what do you remember what it
I have
was?
a bad habit of just going on and on
Oh
and
no, that's
on.
okay. Do you remember what that was? I think you were
We
saying
were yeah,
we were
what were
talking
we
about
saying?
the downstream effects of real estate.
Downstream effects of real estate. I said I wanted to mention. Oh, I think I did touch on that because that was the
Oh,
the
you did. Okay.
borrowing against yeah,
Yes,
because that's the biggest strategy right now, right?
that's it.
It's like looping. Like people in DeFi are like, did you ever loop your ETH? I'm like, did you ever loop real estate? Nothing new is going on here. You,
Yeah.
you got loopers going on everywhere. But I think you're right. Those people are really not supplying a good to the industry, right? Like they
No,
they they think they're doing something net positive, but the net positive is their cash flow. The net positive is not to society and then culture at large.
that's it.
People need a home, and and it's not necessarily their fault because they're actually being smart investors and smart stewards of their capital. But now that Bitcoin has entered the scene, they're not being as smart as they can be. And that's what I think that you were touching on. And I wanted to reiterate that was so
Yes.
well said. And I absolutely agree. Real estate is destined to just I don't want to say collapse because collapse isn't the right word, but let's say decentralize or let's say make more equitable, right? Like the distribution of homes. Like now, if you have I live in Florida, if I have a West Coast home and I have an East Coast home, unless I really want to go back and forth between like surfing and boating, well, then I'm probably going to sell that home because if I'm using that home for not surfing or not boating and I'm just trying to store my value in it, well, I can do that much better in Bitcoin. I can do that
Yeah.
much more securely in Bitcoin. And I can take it with me wherever I need to go. God forbid I wanted to up and go. So the comparison between real estate and Bitcoin is almost like the comparison between somebody who wants to talk Bitcoin and they just learned about it last week versus someone like you and me who has put in thousands of hours of studying Bitcoin. It's uncomparable, the two
Yeah.
asset classes. And you have engineered money that is a real solution versus real estate, which has just been a temporary solution as we try to figure out how to turn that inflation into our a benefit versus our own demise. And that's what's so exciting about Bitcoin and collateralized lending. I think it truly does make inflation your friend. And if
Yeah.
everybody can understand that, then it's like you all of a sudden you don't care that the government is printing the money anymore. Matter of fact, print it up, baby, because the more you print, the more purchasing power I have. Right? So it's a trade-off there. I'm not saying that should happen. I'm not saying I want that to happen. I'm just
Of
saying
course.
that at least they're not stealing from me anymore. at least I can protect my time and energy.
Nothing they can do can destroy your purchasing power. I think that's essentially it. Right?
Yes.
When you're on a Bitcoin standard, you can't have your money taken from you unless they come to your door, unless they come knocking. Of course, that's different. Not saying that that can't happen, but if they do it to one house, how many houses are they're going to get to?
Yeah.
10, 15 until the news spreads. People start telling everybody, "Hey, they're coming to your house to take this." People are going to arm up, right? That's just where it is. This is
Yeah.
how it goes with inflation with the legacy system. They can easily take your money without even telling you.
Yeah.
And that's I think where the biggest benefit of Bitcoin is. They
Yeah.
can't steal from you without your permission.
And that's what these CBDCs are all about. These
Yes.
CBDCs are the opposite of Bitcoin. Bitcoin is economic freedom, it's financial freedom, and if you are willing to die, they can't get it from you.
Right.
And even if you're not willing to die, they're going to have a very hard time getting it from you. So CBDCs are the exact opposite of this, where all of a sudden it's not just about naming the price of money. I'm voting for Donald Trump. I support Donald Trump. But I have to say, when Donald Trump came out the other day and said credit cards should be limited at 10%, I was like, wait a second. Didn't you just bash Kamala for price controls? And now you're talking about price controls, Like
Did he say
it's
credit cards should be limited for the interest?
yeah, credit
Ah,
card interest should be limited at 10%. But as
okay,
you
okay,
well
okay.
know, the interest rate is the price of money. So when you
Yes.
try to control the interest rate, you are trying to control the price of money. And all of these Republicans who come out and say Kamala is an idiot because she's trying to do price controls and it never worked. Well, I'd really appreciate if you could turn to the Federal Reserve and say the same thing. Because when they control the price of money, that is a price control. And that's one of the biggest things that I think I'm most excited about for Bitcoin. Where I think Bitcoin goes as engineered money is it shifts the paradigm from governments being the least, let's say, the riskless borrower, right? When you lend to the government, it's considered risk free. In the future, when you lend to a Bitcoiner, it's going to be considered risk free.
Right.
Governments are no longer going to be the risk free borrowers. And that empowers us, the holders of Bitcoin. That empowers we, the people who work for Bitcoin instead of those dollars. And that's one of my most that just gets me fired up. That idea that we can take this system and have the small guy be empowered through the actual design of the money, through the engineering of the system itself, versus these central bank digital currencies where they're going to come in, they're going to tell you they don't want to just control the price of money. They want to control the price of everything. They want to tell you, here's your social security. Here's how we're going to fix social security. Forget Bitcoin bonds. We're going to do central bank digital currencies and we're going to send you, and your social security is going to expire. So you spend it or it expires. And if you don't spend it, well, then you didn't need it. So it expired. So, now the money can expire. Or hey, when you get Social Security, you can only spend it on housing and food, right? It's your retirement, but you don't have any right to use that money for vacation or for pleasure or that's the level of control that these people are coming for. And we can see that in the central bank digital currency, which is the exact opposite of Bitcoin. So it's just such an important time for people to step up and embrace freedom and think for yourself because we now have the tool that we always needed, which is Bitcoin to claim our freedom.
That's exactly it. I think over time, people are going to realize that CBDCs are not the way to go. I get a lot of comments saying, "Oh yeah, CBDCs are the way to go. We want CBDCs. We want CBDCs." But I don't think they quite understand what the problems with that is. And I mean, I think you outlined it pretty well there. The goal is censorship. The goal is them owning our money, having control over us, not letting us control our finances. And I think that's the everything that the current system is built on. And over time, it's just getting worse and worse and worse. I think that's about it. I don't have any other questions for you. Any other last comments that you have?
Well, I just want to say thank you so much for having
Of
me on your
course.
show. Like I said before, I definitely Twitter stalk you because I love the way your mind works. You get me thinking. And after the last decade of studying this, there's not many people that get me thinking too much about it. So to be able to get your perspective and then have this conversation with you, it's been such a pleasure. And for those who want to follow more of my work and my opinion, you can follow me on Twitter and YouTube, both at CJ Constantinos. You can DM me. I'm here to help deliver the orange pill. I'm here to wake people up so that humanity can claim back its freedom, and that's what People's Reserve is about too. We're here to serve we the people, a market maker for we the people who can empower us with both money and currency until finally we reach that transition where all demand is for Bitcoin and these fiats are long gone. So thanks again for having me. It was a pleasure, and best of luck with your show, and keep up the great work with all the content that you're putting out.
Appreciate it. I'm going to link your Twitter and your YouTube in the description below. If anybody who's watching this does find value in the content that CJ is providing, I found a lot of content. I found a lot of value in it. Like again, like you said, some of the best people that are posting on Twitter, they're making other people think, and you're one of those people as well. I'm glad you think the same of me, but I feel the same as you. I mean, follow CJ on both Twitter, YouTube. I'm sure you can post this on your channel as well. But other than that, I think we are good to go. That was a great conversation.
Thank you.